How to record transactions accurately. In this video, I'm going to be talking about bookkeeping fundamentals specifically related to recording expenses. Now, this is a practical aspect of bookkeeping, recording financial transactions, specifically, like I said, expense transactions. I'm not talking about QuickBooks Online in this video. I'm simply talking about bookkeeping fundamentals, debits and credits related to expense transactions. Pretty much all money your business spends on costs incurred by the operation. But keep in mind, this is not necessarily all of your money spent. So like money going out, money that you spend. But in order for it to be recorded as an expense, it needs to be a transaction that can actually be expensed for tax purposes in the time period. A specific example would be if you spend $50,000 to buy a truck for your business. Yes, you're spending $50,000, but that specific transaction is not an expense. In a later video, I will explain what kind of transaction that would be and how you would categorize that. But this is money spent on costs incurred by the operations of the business. A couple important steps for recording these expense transactions. First, always recommend make sure you have some type of documentation. Invoice, receipt, bank statement. You need some type of information to back up your expense transactions. Pretty much all the information you need, the date and the amount. That's really it. That's all the information you need. If you're using QuickBooks Online and you connect your accounts to the bank feed, the date and the amount should automatically pull into the QuickBooks Online bank feed. Some common categories for expenses for business owners: utilities, rent, job supplies, insurance, payroll wages, just to name a few. We also have the option to create what's called a subcategory. A good example would be marketing. Marketing is an expense category in your chart of accounts for your accounting. And then we can have subcategories beneath marketing. Maybe we have online, print materials, and contractors. These are all related to marketing, but maybe we want to differentiate between different types of marketing. Online, maybe that's Google Ads. Print material, maybe that's flyers or mailers. Contractors, maybe we hire a social media manager to help us with marketing. You can see how those are all three related to marketing, but we want a little bit more detail in our profit and loss, in our chart of accounts. So we can use subcategories. And then the last thing you'll need after you get the date of the transaction, the amount of the transaction, you also want to make sure you have the vendor details or the payee. Who did you pay? This is especially important if you're paying subcontractors or 1099 independent contractors. You need to keep track of these expenses so that you can give your contractors a 1099 at the end of the year. So, what's the point? Why is this important? First and foremost, financial reporting. You need to categorize your expenses so that you can have an accurate profit and loss, which will also turn into an accurate balance sheet. You need to record your expenses accurately so that you can have good financial reporting. Tax compliance. Like I said before, 1099s to independent contractors, but also you want to make sure you record your expenses so that it reduces your income so that when you file your taxes to stay compliant, you're not overpaying your taxes. You have your gross income, your gross revenue, top line revenue, how much money the company made before expenses, but you're not taxed on that. You categorize your expenses, you subtract your expenses from your top line revenue to get your net income. And that's what you pay taxes on. And then finally, performance analysis. Having bookkeeping in place, having your transactions categorized, super important for performance analysis so that you can look back. You can look to the previous month, previous quarter, last year, and compare. How much money did I spend on marketing? How much did I spend on fuel? How much did I spend on payroll wages? Performance analysis, financial analysis is so important. It's that next level, but in order to get to that next level, you need to have a foundation, and that foundation is bookkeeping. And a big part of bookkeeping is categorizing expenses. Okay, let's talk about categorizing expenses in terms of debits and credits. Let's start with the most basic example. You take your cash, you go to the store, you buy supplies. We're going to debit expense, credit cash. Most basic example. By debiting expense, we are decreasing our net income, which means we're decreasing equity. By crediting cash, we're decreasing the bank account, which decreases the asset. So remember, assets equals liabilities plus equity. So we're debiting the expense, decreasing equity, and then also decreasing the asset. The other example, we can include accounts payable. So in this example, we're going to debit the expense account, same thing, debit the expense, but we're not spending cash yet. We're crediting accounts payable. So we're increasing our liability and decreasing our expense, but it cancels out. So assets still equal liabilities plus equity, still equals debit expense, credit accounts payable. We haven't spent the cash yet, but we're still recognizing the expense by allowing it to flow through accounts payable. Final example, after we debit expense and credit accounts payable, then we pay our bills. Then we pay our accounts payable. So now we debit accounts payable and we credit cash. So we take our money, we spend it, we decrease cash, and then we debit accounts payable. We basically cancel out the previous bill, the previous accounts payable. So those are the two main types of ways that you can record expenses using debits and credits.